With us. We got a big week next week. We've got Jackson Hole. We've got Powell speaking on Friday. Where are the markets right now, do you think? And what are we pricing in terms of Fed?
Yeah, good morning, Melissa. Thanks for having me. I really think the catalyst under this market rally is that the market is picking up, that there's already a new easing cycle that started. And the free market is already done tightening. Bond yields from 2 years to 30 years have stopped going up, come down somewhat. The dollar sort of rolled over, junk yield spreads have come in. Fiscal juice is starting to expand again, not only with the past policy, another package, but also just because the economy slows, automatic spending goes up and automatic tax receipts slow. So you're getting a lot of a new liquidity cycle, if you will, and I think that's what it's responding to. The Fed, it's been behind the curve the whole way. The bond yields have led yields in the tightening cycle up, and I think the bond yields are now leading the easing cycle down again. So, we're going to certainly the market will pay attention to the Fed. There's no doubt about that. But look at, Fed has continued to talk very hawkish, and the markets continued to climb through this period. And really, bond yields have stayed pretty tough around this 3% area, whether inflation's hot or cold, whether the Fed's hawkish or dovish. I think it's saying that we're into a new easing cycle, and as an investor, do you want to miss that?
So I thought that, up until that last sentence, Jim, that you sounded like you're skeptical of the latest run that we saw from June lows. Is that the right characterization? Because I'm wondering where you no. So no. You agree? You want to be on that?
I do. If we're into a new easing cycle, I don't want to miss that. I mean, inflation's also coming down, Melissa, and as it comes down, real liquidity growth is going to improve, even if nominal liquidity growth doesn't change.
The slope of inflation, Jim, I'm sorry to interrupt you, but the slope of inflation coming down isn't going to be the slope of inflation going up. I mean, it is a possibility that we've seen peak, but that inflation remains stubbornly high. And so in that case, if inflation does that mean that the Fed is going to declare victory and really ease? I'm just wondering what is behind the notion that we're entering this easing cycle?
Well, certainly, as I just went through, all the free market is already showing easing. And the Fed is the last character that hasn't yet. But, to the inflation point, there's plenty of reason to suspect that inflation is going to keep going down, Melissa. The biggest thing is that past policies have been incredibly contractionary. Real money growth peaked in March of 2021 at about 25%. It's now at minus 3.5%. There's been some extreme monetary tightening in the last year. Fiscal growth was 18.5% of GDP. Fiscal deficit spending to GDP in March of 2021. It's down to about 4% now. There's been pretty extreme fiscal tightening. Bond yields have gone up. The dollar's been up 20%. The lagged impacted that, and there is about a 1-year lag from policy tightening to when it really impacts the economy. We're in that cycle now, but yet when you look at what's already occurred in the past, that lag is going to continue to put a downward force on economic growth and inflation well into next spring. So the Fed can stop now because there's already policy tightening that's going to continue to push inflation lower. One other point, if I go back and look at major inflation peaks, let's say any inflation peak above 5%, almost every one of those is a V top. You just can't find a rounded major inflation peak. They all come down pretty fast, about as fast as they go up. And I think this one so far looks pretty similar to me.